The plan is working. Inflation's falling faster than expected to the lowest level in nearly 2.5 years, helping people's money go further. That's the message today from Prime Minister Rishi Sunak and Chancellor Jeremy Hunt. But the reality is that inflation remains stubbornly high in the UK. Let's have a look at the situation before the Office for National Statistics published their new inflation data at 7 o'clock this morning. Inflation was down at 3.4% during the year to February 2024, having come all the way down from 11% back in October 2022. And then we got the inflation number for today. Consumer Price Index rose 3.2% during the year to March. So between March 2024 and March 2023, prices rose on average by 3.2%. That's the lowest CPI inflation number since September 2021. It's down, as I said, from over 11% in October 2022, but it's still higher than financial markets expected. Let's have a look at some of the breakdown. Food price inflation is now easing. Back in March, food prices on average were almost 20% higher than they were in March the year before. Food price inflation in January and February fell from 7 to 5%, and we just learned that food inflation during the year to March was 4%, which is good news for shoppers filling their baskets and their trolleys. How about petrol and diesel prices? Well, the fall in petrol and diesel prices is now slowing down. Motor fuels fell 6.5% during the year to February, but they were down, we learnt today, only 3.7% during the year to March. So the fall is slowing, and petrol and diesel prices have actually risen slightly over the last month. Utility bills, gas and electricity, also stubbornly high. Utility bills fell only 1.6% during the year to March, and they've actually risen over the last month as oil and gas prices have risen on world markets. We should say, though, that next month's inflation number, the April number, should see a fall in inflation because of a drop in the Ofgem energy price cap. How about the big question? What does all this mean for interest rates? Well, interest rates are currently at 5.25%. The Bank of England has kept them there since last August. That's the highest in 16 years. And the Bank of England next meets on Thursday, the 9th of May, to decide interest rates. They will be considering the fact that inflation in the US is still high. It just rose to 3.5%, higher than 3.2% here and higher than inflation in the Eurozone, which is 2.4%. The fact that US inflation is actually rising means the Federal Reserve, the US central bank, is less likely to lower interest rates anytime soon, which makes life more complicated for the Bank of England's rate setters if they want to cut rates. And this is the problem, the oil price. The price of energy that the world uses. In mid-January, it was just $73 a barrel. Now it's $91 a barrel, and that's 25% up over the last 3 months. That feeds into petrol, diesel prices, the prices of everything, and there's lots more geopolitical risk, of course, too. And this is why inflation remains stubbornly high. This welcome news comes on top of our cuts to national insurance, say the Tory High Command. So people should start to feel the difference as well as they see it in their paychecks. But the reality is that interest rates, we thought they were going to fall in May or June. After this inflation number, which is still higher than expected, we're more likely to look at July or August for that first interest rate cut.